Howmet Aerospace doubled its value over the past year, but what makes this company stand out in the competitive aerospace and transportation industries? Is it a high-flying investment ready to take your portfolio to new heights, or does it come with some turbulence ahead? Let's break down what makes Howmet Aerospace tick, from its strong financials to its growth opportunities and potential risks. Stick around, because this might just be the next big player in your investment strategy. Howmet Aerospace, trading under the ticker HWM, is a global leader in advanced engineered solutions, serving the aerospace, transportation, and industrial sectors. The company's expertise lies in precision-engineered components like jet engine turbine blades, structural parts, and fastening systems. Its products are critical for commercial airplanes, defense aircraft, and even heavy trucks, making Howmet an integral part of multiple industries. Commercial aerospace is the company's bread and butter, accounting for over half of its revenue. The remaining share comes from commercial transportation, defense aerospace, and industrial applications. Whether it's keeping planes in the sky or trucks rolling on highways, Howmet's innovative technologies make it a vital player in these markets. And while the company's history stretches back nearly a century, it wasn't until its spin-off from Arconic in 2020 that it became a publicly traded company in its current form. Since then, it's steadily carved out its niche as a market leader. When we dive into Howmet's aerospace financials, the numbers paint a picture of consistent growth and disciplined financial management. Over the trailing 12 months, the company generated $7.27 billion in revenue, an impressive jump from $6.64 billion in 2023 and $5.66 billion in 2022. This steady growth reflects strong demand across the aerospace and transportation sectors. Howmet's profitability metrics also stand out. Gross margin improved slightly to 28.53% in the TTM, compared to 28.12% in 2023, showcasing the company's ability to maintain efficiency even as it scales. Operating income surged to $1.54 billion, with an operating margin of 21.13%, a notable increase from the 18.12% margin achieved in 2023. Net income rose to $1.08 billion, up from $765 million in the prior year, resulting in a net margin of 14.81%. This growth is mirrored in earnings per share, which climbed to $2.62, up from $1.85 in 2023 and $1.12 in 2022. Cash flow is another area where Howmet shines. In the past year, cash from operations reached $1.28 billion, a significant improvement over $901 million in 2023 and $733 million in 2022. This has allowed Howmet to maintain a robust free cash flow, which hit $1 billion in the TTM, compared to $682 million in 2023 and $540 million in 2022. On the investing front, Howmet allocated $274 million toward capital expenditures over the last year, reflecting its commitment to maintaining and upgrading its production capabilities. Meanwhile, cash from investing activities resulted in a net outflow of $261 million, slightly higher than $215 million in 2023, but still well within manageable limits. In terms of financing, Howmet repurchased $410 million of its common stock in the TTM, continuing its streak of shareholder returns. The company also paid $97 million in dividends, up from $73 million in 2023, signaling a growing commitment to rewarding its investors. Long-term debt repayment of $124 million reflects its disciplined approach to deleveraging, with no major debt maturities until late 2026. Despite these expenditures, Howmet managed to generate a net cash increase of $50 million over the past year, highlighting its ability to balance growth investments with strong cash flow generation. These financials underscore Howmet's solid foundation and ability to capitalize on industry tailwinds, making it a compelling option for long-term investors. One of Howmet's aerospace greatest strengths lies in its competitive advantages. The company specializes in high-engineered alloys and patented proprietary technologies that are nearly impossible to replicate. This gives Howmet a unique position in the market, where competition is limited, and customers like Boeing and Airbus depend heavily on its precision components. Additionally, Howmet's diversified revenue streams across aerospace, transportation, and industrial applications add resilience to its business model. This ensures that even if one segment experiences a slowdown, others can help cushion the impact, making Howmet a stable player in a volatile market. The aerospace industry is experiencing a renaissance. With global air traveling rebounding and defense budgets increasing worldwide, aircraft manufacturers are struggling to meet soaring demand, creating a robust aftermarket for spare parts. This is where Howmet's expertise truly shines. Spare parts, which made up just 11% of revenue 5 years ago, are expected to grow to 20% within the next few years. These parts often come with high profit margins, making the segment a significant growth driver. Sustainability trends also align perfectly with Howmet's focus on lightweight materials. By improving fuel efficiency for both airplanes and trucks, Howmet is well positioned to capitalize on the growing demand for energy-efficient technologies. Looking ahead, Howmet Aerospace is exploring exciting opportunities to expand its footprint and innovate further. The company plans to leverage artificial intelligence to enhance its industrial gas turbine business, catering to the growing demand for data centers and cryptocurrency mining. While this segment may not move the needle until 2026, it represents another promising avenue for growth. Geographic expansion is another key focus area, particularly in Asia, where aerospace demand is growing faster than in other regions. Additionally, Howmet aims to double its free cash flow over the next 4 years, which will allow it to reinvest in its businesses and reward shareholders through dividends and share buybacks. Of course, no investment comes without risks. For Howmet, its reliance on the cyclical aerospace industry is a key vulnerability. Any slowdown in air travel or defense spending could impact its revenue. Additionally, challenges in the trucking industry have already led to a 12% decline in commercial transportation revenue during the last quarter. There's also the issue of order delays from major customers like Boeing and Lockheed Martin. While these setbacks are often temporary, they can disrupt Howmet's growth trajectory in the short term. Finally, despite its impressive growth, Howmet's valuation is on the higher side, which could deter some investors. Howmet Aerospace has a lot going for it: strong financials, competitive advantages, and promising growth drivers. If you're looking for a company that can benefit from the recovery in the aerospace industry and the growing demand for sustainable technologies, Howmet could be a great addition to your portfolio. However, with its reliance on cyclical industries and a premium valuation, this stock is best suited for long-term investors who can ride out the occasional corrections. So, what do you think? Is Howmet Aerospace ready for takeoff, or are there better opportunities out there? Let me know in the comments below. If you're interested in a stock that could be Bitcoin's biggest play, then click on the video on screen right now. Thank you so much for sticking to the end of the video. And as always, happy investing.